Lilly's pipeline's not very good. They already got everything approved, that's why. Kind of looked overvalued to me. Have you gone mad? Yeah, I have to look at Dexcom. Thanks for suggesting it. Wonder if I got some of these salts numbers wrong. They look weird. Specifically Q1 21. Well, anyway. Umesh, good question, man. I wish I was more driven to work hard. You know, I said lately I've been sort of struggling to find some of that extra energy I'm well known for. I'm still probably working harder than most people, but yeah, it's difficult. You know, I think you got to think about the people that depend on you. Um, you know what you're really capable of in life. You know, rising to that kind of challenge. Man, Rosenio's selling like crazy. They can't go on forever. I know they have a little bit better label than their competitors. Yeah, Lilly just has these crazy growth products. I really like Jardiance. Illumient's going to be difficult to forecast. People were using it for COVID for a little bit there. But it's still a JAK inhibitor, and JAKs are going to have a ton of competition, so I don't know. Sega's starting to break down quite a bit. I'm tempted to continue piling in. But I also don't have enough of a cushion for risk. Let me stay in there, I guess. already have a 20% position, which is a pretty insanely large position. I mean, maybe it's not insane for Matt, of course, but it's insane for everybody else. So I think I'm just going to hang out there. No reason to be impatient. All right, let's see here. What's up? My SoCal Cholo. I lean like a cholo. No, I react to news. I make different kinds of trades. I don't do technical analysis, but I trade based on sentiment, things like that. You know, certainly for investing, valuation is very important to me, but it's not the... something's up with my screen here on... Excel can be buggy sometimes. Alright, let me get back to this 10K. Alright, this is what I was looking for. So, we have a couple extra disclosures here for Lilly that they don't include in the press release. My favorite. So we got 718.4. This is tricky because I have to remove this from other. It messes everything up. Got other diabetes, or I don't have other diabetes. It's weird. Verbal tux. 548.3. Zyprexa 430.3. Tradta. They stopped disclosing that, huh? I think that might have switched to boring or something. Cymbalta 581.5. Cymbalta was such a great drug when it was not generic, obviously. It's still a great drug. Tevmo, is that listed anymore? It's so annoying. They're so inconsistent with how they report. But it's alright. We will fix it up. There's a balance sheet at least. Hmm. Ah, just what I was looking for. Yeah, my whole internet's messed up because I'm on Wi-Fi, so I can't really. I'm on Wi-Fi and a VPN, so I'm streaming and browsing like I'm in 1999 or something. Although there was no streaming back then.
Trading connection re-established. Market data connection re-established.
Ladies and gentlemen, thank you for standing by, and welcome to the Lilly Q1 2022 earnings call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session. Instructions will be given at that time. Should you require assistance during the call, please press star then 0, and an operator will assist you offline. And as a reminder, your conference is being recorded. I would now like to turn the conference over to your host, Kevin Hearn. Please go ahead.
Good morning. Thank you for joining us for Eli Lilly and Company's Q1 2022 earnings call. I'm Kevin Hearn, Vice President of Investor Relations. Joining me on today's call are Dave Ricks, Lilly's Chair and CEO, Anat Ashkenazi, Chief Financial Officer, Dr. Dan Skavronsky, Chief Scientific and Medical Officer, Ann White, President of Lilly Neuroscience, Ilya Yuffa, President of Lilly International, Jake Van Naarden, CEO of Loxo Oncology at Lilly and President of Lilly Oncology, Mike Mason, President of Lilly Diabetes, and Patrick Janssen, President of Lilly Immunology and Lilly. We're also joined by Sarah Smith, Kento Ueha, and Lauren Zerke of the Investor Relations team. During this conference call, we anticipate making projections and forward-looking statements based on our current expectations. Our actual results could differ materially due to several factors, including those listed on slide 3. Information concerning factors that could cause actual results to differ materially is contained in our latest Form 10-K and subsequent Forms 10-Q and 8-K filed with the Securities and Exchange Commission. The information we provide about our products and pipeline is for the benefit of the investment community. It is not intended to be promotional and is not sufficient for prescribing decisions. As we transition to our prepared remarks, please note that our commentary will focus on non-GAAP financial measures. Now I'll turn the call over to Dave.
Thanks, Kevin. 2022 is off to a strong start, with solid volume-driven revenue growth led by our key products and the new tirzepatide obesity data we announced this morning. We are focused on driving adoption of our newer medicines, preparing for key product launches, delivering several global submissions for potential new medicines, all the while advancing our pipeline to power the next wave of growth. We are pleased with the progress we saw in the first quarter. Before I get to our results, I'd like to take a moment to Ukraine. Our Ukraine office is currently closed and operations are suspended. The safety of our employees and their families continues to be our top priority. We are working through logistical challenges in order to ensure supply of our medicines to those in need in Ukraine. Earlier this month, an initial shipment of medicine donated by Lilly, including insulin, arrived in Ukraine thanks to the tremendous efforts of our partners Project Hope and Direct Relief. Few of our clinical trial participants are in Ukraine, so while we're doing everything we can to ensure continuity of their medical care, there is minimal impact to our global trials. With regard to Russia, we have suspended investments, our promotional activities, and new clinical trials there. Our Russian operations are now only focused on ensuring people suffering from diseases like cancer and diabetes continue to get the Lilly medicines they need. Should we generate any profits from our sales in Russia, we will donate them to organizations dedicated to humanitarian relief. Our revenue in Russia and Ukraine account for less than 1% of our total company sales in 2021. Moving to our results, you can see on slide 4 the progress we've made on our strategic deliverables so far this year. Q1 revenue grew 15% or 17% on a constant currency basis and was driven by volume growth of 20%. When excluding revenue from COVID-19 antibodies and Alimta due to loss of exclusivity, revenue grew 10% for the quarter. This volume-driven performance in Q1 is attributable to our key growth products, which grew 24% and now account for 61% of our core business. With long IP runways for many of these products and less than 10% of our 2022 revenue exposed to patent expiry in the next 5 years, along with the potential to launch 5 new medicines over the next 18 months, our non-GAAP gross margin was 76.1% in Q1, an increase of approximately 70 basis points. Excluding revenue from COVID antibodies, gross margin was approximately 80% for the quarter. Our non-GAAP operating margin was 33.4%, an increase of roughly 1,000 basis points, primarily driven by both higher gross margin and lower R&D expenses for COVID antibodies. In our pipeline, we have several important updates since our Q4 earnings call, including the U.S. and EU approval for Jardiance in heart failure with preserved ejection fraction, as well as a recommendation from the Independent Data Monitoring Committee for an early stop to the phase 3 trial studying Jardiance for chronic kidney disease due to clear positive efficacy. The U.S. emergency use authorization for bebtelovimab for the treatment of mild to moderate COVID-19. The recent U.S. submission of mirikizumab for the treatment of adults with moderately to severely active ulcerative colitis. And a positive phase 3 top-line readout for SURMOUNT-1, the first of 4 global studies to evaluate tirzepatide for adults living with obesity or overweight. Dan will talk in more detail later, but we are very excited with the results of the phase 3 SURMOUNT-1 top-line readout. We believe there is significant potential for tirzepatide to build off the impressive results we saw from our clinical program in type 2 diabetes and help people with obesity, a disease impacting over 110 million people in the United States and approximately 650 million people worldwide. Obesity is a chronic and progressive disease that causes over 2.8 million deaths globally each year. The economic impact associated with obesity is more than $1 trillion in the U.S. alone. We believe addressing obesity could make a difference in millions of people's lives, have a significant impact on public health, and reduce healthcare costs. We're hopeful that we are entering a new era of obesity care, where people have medicines that can help treat their obesity, and this is our first proof point on that journey. We continue to rapidly advance nucleic acid innovation at Lilly, building on our growing portfolio with the launch of the Lilly Institute for Genetic Medicines, a $700 million facility in Boston. We will develop novel RNA and DNA-based medicines, as well as push the boundaries of delivery technology to unlock difficult-to-treat targets in key strategic areas for us like neurodegeneration, diabetes, and obesity. Finally, we distributed nearly $900 million in dividends in the quarter and completed $1.5 billion in share repurchases. On slides 5 and 6, you'll see a list of key events since our Q4 earnings call, including several important regulatory, clinical, and COVID-19 antibody updates we are discussing today. Now I'll turn the call over to Anat to review the Q1 results.
Thanks, Dave. Before I review the financial results for Q1, it is important to note that beginning this quarter, following direction from the SEC, presentation of non-GAAP measures will not include upfront charges and development milestones related to acquired in-process R&D and development. While this has no bearing on how we conduct our business, it will have an impact on how we present our non-GAAP measures. This change in presentation of financial results will have the effect of pulling into non-GAAP measures certain charges that were previously reported only in our GAAP financial results. We expect this change will increase non-GAAP operating expenses and decrease non-GAAP operating margins and earnings per share. To help with year-on-year comparison of our non-GAAP measures, you can find a revised workbook in our investor website reflecting the updated presentation of our 2020 and 2021 results. Slide 7 summarizes financial performance in the first quarter of 2022. I'll focus my comments on non-GAAP performance. In Q1, revenue grew 15%. Excluding revenue from COVID-19 antibodies and Alimta, revenue increased 10%, highlighting solid momentum for our core business. Gross margin as a percent of revenue increased 70 basis points to 76.1% in Q1 2022. The increase in gross margin percent was primarily driven by the unfavorable effect of foreign exchange rate on international inventory sold in Q1 2021, partially offset by increased sales of COVID antibodies, which have lower gross margin profile than the rest of our portfolio, and to a lesser extent, lower realized prices. Increase in manufacturing costs and logistics due to inflation had a modest impact on gross margin in Q1. Total operating expenses decreased 6% this quarter, which, as a reminder, is now inclusive of acquired IP R&D and development milestone charges. Marketing, selling, and administrative expenses decreased 1%, while R&D expenses decreased 4%, driven by lower development expenses for COVID-19 antibodies, partially offset by higher development expenses for late-stage assets. This quarter, we recognized acquired IP R&D and development milestone charges of $166 million or 15 cents of EPS, primarily related to a purchase of a priority review voucher. In Q1 2021, acquired IP R&D and development milestone charges were $312 million or 27 cents of EPS. Operating income increased 66% in Q1, driven by higher revenue, primarily due to higher sales of COVID antibodies, lower R&D expenses for COVID antibodies, and to a lesser extent, lower acquired IP R&D and development milestone charges. Operating income as a percent of revenue was 33.4% for the quarter and reflects the benefit from COVID-19 antibody revenue, as well as a negative impact of approximately 210 basis points attributed to acquired IP R&D and development milestone charges. Other income and expense was income of approximately $38 million this quarter, compared with income of $35 million in Q1 2021. Our Q1 effective tax rate was 10.3%,
Nice
an
tax
increase
rate.
of 140 basis
10%.
points compared to the same period
And
in
I'm the criminal.
2021. This increase was driven by a lower net discrete tax benefit this quarter, partially offset by decreased tax expenses related to the implementation of the provision in the 2017 Tax Act requiring to capitalize research and development expenses. At the bottom line, we delivered strong earnings per share growth of 63% in Q1, inclusive of approximately 1,500 basis points related to lower acquired IP R&D and development milestone charges. On slide 8, we quantify the effect of price, rate, and volume on revenue growth. This quarter, U.S. revenue grew 31%, and when excluding revenue from COVID-19 antibodies and Alimta, revenue grew 14% in the U.S. This growth was driven by volume led by Trulicity, Verzenio, Jardiance, Olumiant, and Taltz. We experienced a net price decline of 1% for the quarter and continue to expect a mid-single-digit price decline in the U.S. for the full year. As a reminder, a single competitor to Alimta launched in the U.S. in February, and we expect broad generic entry in May, resulting in significant erosion of U.S. Alimta revenue. Moving to Europe, revenue in Q1 declined 13% in constant currency, and when excluding revenue from COVID-19 antibodies and Alimta, revenue grew 14% in constant currency, driven primarily by volume growth for Trulicity, Taltz, Jardiance, Verzenio, and Olumiant. We expect continued growth in Europe, excluding Alimta. For Japan, Q1 revenue decreased 21% in constant currency, as our business there continues to be negatively affected by significant declines in off-patent products, primarily Cymbalta and Alimta. Key growth products now represent 65% of total revenue in Japan, and we expect a return to growth in Japan beginning in 2023. In China, revenue grew 10% in constant currency. The NRDL access has driven significant volume growth for newer products like Tyvyt, Trulicity, Verzenio, and Taltz, and has been partially offset by related price decreases. We expect this improved access to continue to drive future volume growth, more than offsetting the price decline. The recent COVID-19 outbreak in China and the subsequent protective measures that are currently being put in place to control the spread of the virus highlight the potential for commercial impacts in China in the near term, particularly for our infused products like Tyvyt. Revenue in the rest of the world increased 29% in constant currency this quarter, driven primarily by $95 million in revenue from the sales of rights to Cialis in Taiwan and Saudi Arabia, as well as by increased sales of key growth products. We continue to expect a mid-single-digit net price decline in 2022 for the U.S., Europe, and Japan, with a worldwide net price decline in the high single digits, driven by the expanded NRDL access for our products in China. As shown on slide 9, our key growth products continue to drive robust worldwide volume growth. These products drove nearly 15% points of volume growth this quarter and continue to bolster our overall performance and outlook. Slide 10 further highlights the contributions of our key growth products. This quarter, these brands generated $3.9 billion in revenue and made up 61% of our core business revenue, growing 24%. We're pleased with the continued market growth of both the GLP-1 and SGLT2 classes, where Trulicity and Jardiance are market leaders, as well as with the strong Taltz prescription growth. We're also encouraged by the significant uptake of Verzenio in Q1, driven by the approval and launch of the adjuvant indication, which has led to an inflection in both new and total prescriptions. On slide 11, we provide an update on capital allocation. In Q1 2022, we invested $2.4 billion to drive our future growth through a combination of R&D expenditures, business development outlays, and capital investments. In addition, we returned approximately $900 million to shareholders in dividends and repurchased $1.5 billion in stock. Our capital allocation priorities remain unchanged as we continue to fund our key marketed products and expected new launches, invest in our pipeline, pursue opportunities for external innovation to augment our future growth prospects, and return excess capital to shareholders. Slide 12 is our updated 2022 financial guidance. As I previously noted, our presentation of non-GAAP financial measures will now include IPR&D and development milestone charges. For guidance, we will include charges that have been incurred or realized as of the date of the earnings release, and will not include any impact from potential or pending business development. We're providing information that should make this change as easy as possible to understand, as well as incorporate into modeling. As always, please let us know if there's anything else we can do to be of assistance as you navigate through this transition. I do want to reiterate that margin expansion continues to be a priority for our team. Consistent with prior communication, excluding IPR&D and development milestone charges, we expect to drive further non-GAAP operating margin expansion over time. Getting into the numbers underlying our updated guidance, there are several items that benefited first quarter results which are not expected to recur. These include approximately $1.45 billion of COVID antibody sales, U.S. Alimta revenue of approximately $250 million that will be impacted by multi-source generic entrants in Q2 and beyond, a favorable effective tax rate, and a one-time benefit related to the resolution of cefaclor patent litigation in Canada. I would also remind you that as we look ahead to the second quarter, the Q2 2021 revenue benefited from the sale of Cialis rights in China, which will provide roughly 2.5 percentage points of headwind to our top-line growth in Q2. Starting with revenue, we are increasing the guidance range by $1 billion to now be in the range of $28.8 to $29.3 billion, reflecting the additional revenue from bebtelovimab sales in Q1. While we project an impact from foreign exchange rate, we are expecting to offset it with stronger core business performance. We anticipate that any additional revenue from sales of COVID-19 antibodies to be limited beginning Q2 2022. While the U.S. government has an option to purchase additional 500,000 doses of bebtelovimab no later than July 31st of this year, it is uncertain whether this option will be exercised, and therefore it is not included in our guidance. Moving down the income statement, GAAP gross margin percent is now expected to be approximately 76%, while non-GAAP gross margin is now expected to be approximately 78%. The majority of this 200 basis point reduction is due to the impact of Q1 bebtelovimab sales, which has lower gross margin, and to a lesser extent, an increase of approximately $100 million in logistics and manufacturing costs due to inflation. The range for R&D expenses has been increased by $100 million to be $7.1 to $7.3 billion, driven by investment in our late-stage pipeline, primarily Alzheimer's clinical development, and investment to advance the diagnostics ecosystem. Our guidance includes acquired IPR&D and development milestone charges of approximately $521 million, reflecting Q1 charges of $166 million, with the remainder primarily related to a charge associated with the buyout of future obligations that were contingent upon development regulatory and commercial success of our mutant-selective PI3K inhibitor, this guidance does not include any impact from potential or pending business development transactions. GAAP and non-GAAP operating margin decreased 200 basis points to approximately 28% and 30% respectively, primarily due to the negative impact associated with the acquired IPR&D and development milestone charges to date. Given the accounting change for acquired IPR&D and development milestone charges and the inherent variability associated with such charges, our non-GAAP operating margin figure will not measure efficiency in the same way it has done historically. However, you can track our operating margin in the way you deem most appropriate, knowing that we aim to expand operating margin over time, excluding acquired IPR&D and development milestone charges. Our Q1 2022 tax rate and EPS include a favorable impact from the provision in the 2017 Tax Act that requires capitalization of research and development expenses for tax purposes. Our financial guidance for the full year is unchanged and assume that this provision will be deferred or repealed by Congress effective for 2022. If this provision is not deferred or repealed effective this year, then we would expect our reported and non-GAAP tax rates to be approximately 10 to 11%. It is notable that while this provision favorably impacts certain tax items, which decrease our effective tax rate, we expect it will increase our 2022 cash payments of income taxes by approximately $1.5 billion. Based on these changes, we have lowered our reported EPS guidance by 70 cents to now be in the range of 7.3 to 7.45 per share, and lower our non-GAAP EPS guidance to be in the range of $8.50 to $8.30. That 35 cents reduction in our non-GAAP EPS range includes a 55 cents decrease due to the year-to-date acquired IPR&D and development milestone charges, partially offset by improved business performance of 20 cents, attributable to the net benefit of Q1 bebtelovimab sales and increased investments in R&D. Now I will turn the call over to Dan to highlight our progress in R&D.
Thanks, Anat. Let me start with today's exciting announcement, the positive top-line results from the tirzepatide SURMOUNT-1 phase 3 study. Participants without type 2 diabetes who have obesity or overweight with at least one comorbidity achieved up to 22.5% weight loss at 72 weeks, which translates to a mean weight loss of 52 pounds.
Crazy.
Tirzepatide is the first investigational medicine to deliver more than 20% weight loss on average in a phase 3 study. Indeed, most people on 10 or 15 milligrams of tirzepatide in this trial achieved 20% or greater weight loss, and up to 63% of patients on 15 milligrams achieved this level of weight reduction. Obesity is a chronic disease that needs more effective treatment options for patients. We're working hard at Lilly to create new, potentially innovative medicines with the aim to modernize how this disease is approached.
What do you think?
We hope that tirzepatide can be Lilly's first such medicine, and the SURMOUNT program has been designed to test just that. I'll cover the SURMOUNT-1 results in more detail, but first, let me quickly provide an overview of the SURMOUNT phase 3 program. The SURMOUNT program has enrolled more than 5,000 people with obesity or overweight across 6 studies, 4 of which are global registration studies. On slide 13, you can see key trial design elements for those 4 global registration studies.